All right, everybody. Welcome to our latest training webinar. If you recall, we do this periodically whenever we have a software update or whenever we're just trying to organize training for different types of modules that we have throughout the Zacks system. A few months back, we did one for discussing the software updates we made over the summer. And about a month ago, we did another one led by Mark Shepley, who covered the Zacks Portfolio Monitor, which is the portfolio reporting piece of Zacks. So today we're going to focus on screening. I'm Meyer Thacker. I'm an account manager here at Zacks Institutional Services, and I'll be leading the call here today. So let's get started. We have in Zacks our screening, which you can launch directly from the Zacks research system. At the top, you'll see the screening tab here. If you click on that, it'll go ahead and launch our screening module. Our screener is the primary place to go when it comes to idea generation to help codify or quantify your firm's investment discipline. Even if you don't follow necessarily a quantitative methodology, we can at least use screening to help build a universe for you, so that if there's broad criteria that you look for before even considering a stock, we can help build that into our screener so that you can then create your full universe of companies that you can then start to follow or to actually build a stock selection model. So this screener is very, very powerful with regards to doing either of those two things. As a general navigational side of things, on the left-hand side, you'll see that these are the various different databases that we have. And each database is really built for different things. Some databases are historical, meaning they have history behind each of the items. Some of the databases are just current data. And we do this to help separate out different functionality and help speed things up, because if you only need a current screen, then there's no point in using a database that has a lot of history in it, because it only slows things down. So here, the first database that you see here is DBCM, current market data. This database has about 95% of the items that most people need for screening, at least running a very cursory screen, because it has everything from price and price changes to ratings. As you know, we collect estimates and ratings from over 200 brokerage firms. So we collect and aggregate that data in here. We have estimates and revisions. We have growth rates, different types of financial ratios and whatnot. So this database is really good for doing most types of screens. And then, so once you select the database, then you'll see in the second column, these are the categories, as I just pointed out. So it helps visualize and help organize all of the various different items that we have. And then at the very right-hand side of it are the items themselves. So now this is the part where you actually would double-click on to start screening on a particular item. So here we have EPS projected, and this is the next 3 to 5 years estimated earnings growth. And so this is the long-term growth that's coming from the consensus of the sell side. So if you wanted to say screen on this particular item, the first thing you would do is just double-click this item, and now this new window will pop up where you can then set your parameters. So you can say I want to screen for all stocks that have at least a 10% long-term estimated earnings or growth rate, 15%, 20%, whatever you want. You just enter it right into there. So here's the greater than sign, and then 15 if that's what you want. You just enter that. There's a lot of options in here, by the way. You could screen greater than, less than. You could search for a specific number. You could search for within a specific range. So instead of saying greater than 15, you could say has to be between 10 and 25%. So that would give you all stocks that have an estimated long-term growth between that upper and lower bound. So there's a lot of options in here. I'd highly encourage you to check it out. You can screen for it. We'll actually dive into that a little bit more in detail later in the call. So let's say you wanted to put this as your criteria. You would just hit OK. and then now it adds it to your screening criteria. It also adds it to your report definition. So now if I were to run this by hitting query, it'll then go ahead and find every company out there that has that long-term growth rate estimate between that range that I specified. So there's over 1,000 companies that are passing that. So let's take an example of a screen and start piecing it together. So let me clear this out here, and we can kind of go about doing it. So let's just say that you're trying to find stocks that are actually beating the S&P, right? Because the market's up so much this year, it's hard to find, hard to build portfolios that actually ends up beating, the overall market in such a strong up market. So here we have price momentum. This is a relative strength index, so it ranks all companies from 1 through 99. Anything with a rank greater than 50 means that it's beating the market, and anything less than 50 means it's underperforming the market. So if I were to just double click this, I'd say let's just search for all stocks that have a ranking of at least 60 or greater. Okay, and then let's do the same thing with the 24-week period, so that way we know that it's outperforming over the entirety of the 52-week period. It's not heavily biased in the first half of that 52-week period. So let's put this at 60 as well, greater than 60. And now just for kickers, let's say that it's just underperforming over the last 4 weeks. So maybe it's just having a correction, a short-term correction, but still doing really well overall over the past year and over the past 6 months. So let's just say less than 45 for that. Alright, so as you can see, as we're adding these here, you're going to start to see this list down here at the bottom grow bigger and bigger, as well as the report definition is growing as we add each item. Now let's take a look at maybe let's just say we want to find stocks that beat on their revenue estimate in the most recent quarter. Okay, so the stocks are doing well, but let's look for companies that are doing well because they exceeded their revenue targets for the quarter. So here's our sales surprise figure, and now let's just say greater than 0, which means they simply had a sales surprise. We don't want to, let's not specify by how much, but just greater than 0 means that they beat the estimate for their top line. And then now let's go over here to Zacks Rank. The Zacks Rank is our earnings momentum model. It quantifies the extent to which analysts are revising their estimates up or down. So let's select that and say we want to find only the best of the best, which means the Zacks Rank of number 1. So we'll say equals 1. And then lastly, let's just top it off with a basic market cap requirement, so that we're picking at least, let's just say market cap greater than $1 billion. So here's market cap, and as you can see, you might be getting the hang of this by now. It's just as simple as finding the item you want, double-clicking it, and then specifying the value you're looking for. So market cap has to equal greater than 1,000, which means it's greater than $1 billion. So if I hit OK there, now you'll see that we have this nice little growthy list of criteria. Strong momentum stocks that beat on top line revenues, as well as have analyst estimate revisions for the next year, coming in really strong. So now we have multiple criteria in here. So the same thing we do to run it, we just hit query, and then boom, here is our list. So now exactly 20 stocks are actually passing this right now, and then here is the report itself. So as you can see, the items that we screened on are automatically added to the report, so that way you can see the values in there. So this is a list of stocks that are potential entry points. Companies that have done really well, have strong fundamentals, but are showing some weakness in the most recent 4-week period. So that could be that the stocks are just taking a break before resuming their uptrend. So just a little idea that I wanted to throw out there. So this is an example of a type of screen that you can run to help identify potential investment candidates. You can always add to this now. Like, let's say you want to keep that the screening criteria steady, but let's say you want to see additional data points. Let's say you want to see what the long-term estimated growth is. So now let's go back to this item here, and instead of double-clicking it to specify a value, we instead would want to right-click it and say Add Database Item to Report. So what that does is that it'll go ahead and add it to the report, but not necessarily screen by it. So let's say we want to add a couple others too, like dividend yield. We do the same thing, right-click, Add Database Item. And then let's just look at a PE for fun here. So let's look at the forward PE, right-click, Add Database Item to Report. So we added these 3 items. So now if we rerun the screen, we're going to see the same 20 stocks, but now you'll see the additional 3 columns here. Okay. All of this data is exportable to Excel. We're big fans of just being as open source as possible. So if you just go up here to data, you can actually export this to Excel and have it as a spreadsheet. And then these columns you can sort. You'll notice that it's already sorted by industry group. You can sort it by industry, or you can sort it by the broader sector. So now it's being grouped by sector here: technology, finance, transportation, whatnot. And then you can always double-click on any item, on any column, to sort it by that number. So the biggest market cap comes in first, and you can do that for pretty much any item in here. Now to save this, let's say you want to come back to this and and always refer back to this report, the screening criteria. You just go up here at the top, go to Screen, and click on Save Screen Definition. And I'm going to go ahead and call this Momentum Growth. I have this screen here pre-built from before, but let's just go ahead and override it. So you can call it anything you want, and then click on Save. Do I want to replace the existing? Yes. And now, because the report definition is slightly different from our screening criteria, we want to go ahead and save that as well. So to do that, we go up here to Report, do the same exact thing, Save Report Definition. I had this here before. Let's just go ahead and override it. Save. Do you want to replace? Yes. So now we have both of these saved. Now there's one last step, which is let's just tell the system that whenever I open up this screen, I want it to also automatically open up this report. Okay? Because otherwise, if you don't do that, it's only going to show you the items that you're screening by and not the additional 3 that we added. So to attach those two together, you just go up here to Report, click on Attach Report to Screen. So here's our screening criteria. Now let's attach it to our reporting criteria. You'll see that the only difference here is the extension. It's a .UND for the screen. It's a .RPD for the report definition file. So we just hit Save, and now that's it. So now let's just say we come back to this tomorrow morning and we just rerun the screen. This is starting off as a blank slate now. All you really have to do is go up to Screen, Open Screen Definition, select that screening criteria, and then boom. Here's our screening criteria and then our saved report as well with the 3 additional items. So that's all we have to really do here, and that's it, and that's a good sort of introduction or overview of screening. So now let's dive into a few more advanced concepts here. There's a lot more that we can actually do. Let's say you want to run a screen that does something more relative rather than absolute. If you notice right here, we have only absolute numbers. We specified specific values to look for. But let's say you don't want to do that. So let's clear all this out here. And let's say you want to run a report, or run a screen that says, okay, I want to find all S&P 500 members that rank in the bottom 25% by the PEG ratio. Okay, so S&P 500 members that rank in the bottom 25 percentile by the PEG ratio. So now what we do here is we select S&P 500 as our first criteria. So here's that right here. So we say equals member. Alrighty, And now PEG ratio is a valuation ratio, so that would be down here under ratios, valuation. And here is the PEG ratio, right? So now we double click it just like before, except now on this on the drop down menu, we scroll down and you can see that there's a bunch of other options here. We scroll down and we select bottom percent, right? And now we say bottom 25. So this is going to show us the lowest 25 percentile of S&P 500 companies according to the PEG ratio. Okay. So now if we run this, we're going to see exactly about 25%, which is about 126 companies, and this is the list of companies that pass. So you can do this for just about any metric you want. It could be bottom percentile, it can be, if you're using a different metric like growth, you can look for top percentile. There's also other options too, like you can look for a hard number like the bottom 100, top 100. You can even search within sectors too. So you could say, show me the top 5 or the bottom 5 PEG companies by sector. So there's a lot of neat stuff you can do in here. So if I did that, right, and delete this other one that we have here, now this is going to show me the bottom 5 in every S&P sector. And there we have it there. So there's a lot of really cool things you can do on a relative basis with these screening tools in here. So let's take a look at a slightly different example. This is one example. Another way we could do a relative screen is by looking for different metrics based on the S&P average, for example. So let's say we want to build a quality screen. So by quality I mean low PE as well as strong return on equity as well as low debt to total capital. So the way we could do that is, let's say we want to find all stocks that have a PE less than the S&P average. So we begin by selecting that PE ratio. Okay, so the same window pops up again. Now instead of selecting anything in here or anything in this box, we would click on this group radio button, and now we would say less than, and here is the S&P 500 market weighted average. So if I hit OK here, what this is going to do is that it's going to help me find all stocks that have a forward PE less than the S&P average. Okay, so we can continue on and keep doing this. Let's look at debt to total capital as well. So we go down here to debt or leverage. Here's our debt to total capital. And we would do the same thing here. So we would say group, and we want to find all stocks that have a debt to total capital less than the S&P average. And then let's throw on a return on invested capital number as well. So we go over here to return on investment. Here's ROI. We can do that same thing here. So you see, as we're going through this, we're basically looking for stocks that have desirable valuation and balance sheet ratio characteristics, but we're not specifying a specific number. We're just saying that we want them to be competitive to the S&P 500. Okay, so we have these three right here: low PE stocks, low debt to total capital, and strong ROIC, return on invested capital here. So all of these, we didn't specify a single value. All we're doing is comparing it to the S&P average. So now we can run this, and now it's going to show us a bunch of companies here that satisfy that criteria. Now you can see here right off the bat there's a couple of these that are negative. Like we have, since we're looking for less than the S&P average, I believe the S&P PE right now is about 19 and change. So if we say less than, then it's going to find negative stocks too, negative PE stocks. So we can always go back and run a basic other filter that says, okay, it has to be greater than 0. So that's always something that we can do. So now I'd go back here and say has to be greater than 0, has to be greater than 0 here. And has to be greater than 0 here, which is probably going to be the case anyway for debt to total capital. So we'll leave that one out. So now that's going to come down to a more manageable universe of about 817 stocks. Okay. So that's another example of a relative screen that you can do. Now the same thing applies to the report. You can do things to the report where you can create a calculation expression. So that's another part of this as well. Let's say, for example, you want to do, let's say you're going through this and you don't find a particular item that you want. Okay. For example, we have the PEG ratio, but let's say we didn't have it, right? Let's pretend that you're looking through this and you don't see PEG. However, you see PE and you see our projected growth rate right here. So how do we combine those two? So this works the same way as Excel, where if you have like cell A1 times cell A2 divided by cell A3, and that's what you want to output for cell A4, it works the same exact way. So to do that, you'd go up here to Screen, and this time you'd go up here to Screen by Calculation Expression. And this opens up a whole new ball game, because now you can take items and do, massage them and manipulate them. So over here you would go down, and let's use our PEG ratio example again. PE is down here. Let's go ahead and select that forward PE again. So if I double click this, you'll see that the code appears right here in this bar at the top. I646, that's the item number in our database that refers to forward PE. Okay, and now we just divide by. You can just select that, or you can just type it in directly into here. You can just type in, slash for the divided sign. And then go up here to EPS projected, and we pick out our growth rate estimate again. Double click that. And that's it. So now we have a calculated item, a very basic calculated item. And you can do a lot more than that. You can, do open parentheses, close parentheses, multiplied by, or take an exponent, or do whatever you want. So this is up to you on how you want to do this. You can, mix any number of items throughout any of our databases and create your own calculated items. So again, if there's something that you want that you don't see pre-canned in our database, you can most likely create it through this calculation expression. So if I were to hit OK here, now the same window pops up, and now I can screen on the same exact thing. So let's look for all stocks with a PEG between 0 and 1. There we go. So now this is a calculation. If I run this, now we're going to find all stocks that are trading at a low PEG ratio. And that's about 270 right now. So calculation expressions open up an entirely new way of screening. So this makes our screener even more powerful and more customizable. Now, there's another thing as well that makes it even better, and that is the ability to create your own ranks. So by ranks, what do I mean? Let's say you want to find, going back to our quality screen example where we had ROE and our ROIC and our leverage number, debt to total capital. Let's say you want to find companies out there that have the best ROE and yet have the lowest leverage on the balance sheet. So the lowest debt to equity, let's just say. But not only that, you want to find which stocks out there rank in the upper 25 percentile of ROE and yet simultaneously rank in the bottom 25 percentile by debt to equity. So you're looking for companies with strong returns on equity without having an overly leveraged balance sheet. Okay, so let's take a look at that. Why don't we try doing that here? And just for fun, I'm going to shift over to our ratios database. This is another database I highly recommend you check out. It has, just as it's called, every type of financial ratio that you can really think of. So it's really convenient. It's right in one database right here. All of your various different margins, leverage, return on capital ratios, your valuation ratios, it's all here. Both current and historical, going back about 160 quarters. So let's take a look at how that works. How do I create a rank, based on fractiles or deciles for those two items? So I would go up here to screen by calculation expression. Okay, and let me clear this out here from before. So let's take our first item, ROE, right? We want stocks that have the highest ROE. Okay, so here's ROE, right? Now, at the same time, there's always going to be outliers out there. You're always going to have, either micro caps or even some, mid cap stocks that have, ridiculous ROEs like 100% or so. So let's say you want to just filter those out, right? So what we're going to do here is I'm going to go down here to rank. So this rank right here, you'll see that there's all these different options like ordinal rank, histogram rank, uniform rank. These are the three main types of ranks that we have. I'm going to use the uniform rank. So what uniform rank does is that it groups all stocks in the entire universe into equal baskets. And you can specify the number of baskets. So the number of baskets, is, as we call fractiles or deciles, you can determine down here at the bottom. So I'm going to create 20 of them. So that what this is going to do is that it's going to drop all stocks into 20 equal baskets by the return on equity that they have. And it's going to be in descending order, so that means that the lower the number, meaning 1s, 2s, 3s, 4s, are the ones that have the best ROE. Okay, so let's go ahead and select that item and then add that. So now you'll see that this is a new function that just came up in here. All uniform rank in descending order with 20 baskets for item number 540. Item number 540 is our return on equity. Okay, so let's go ahead and hit OK on that. And now we're back to the same exact screen, and we're going to say we want somewhere between 2 and 7. We're not going to do 1s because as I mentioned, if I selected 1s, then you're going to have a lot of outliers out there. So let's just try to adjust for those outliers, and we're going to pick all of the stocks that fall in baskets 2 through 7. And remember, there's a total of 20, so we're actually squarely in the top, greater than the 50 percentile of stocks. So we add that there. And now at the same time, we would go back and do the same exact thing, but for our debt to equity. So let's scroll down here, and I think I passed it. It's right up here. Total debt to total equity. Okay, go back to rank. We want the uniform rank. Let's go ahead and select that item. We want 20 fractiles. And let me clear this out from before. And let's go ahead and hit add selected function. There we have it. Hit OK. And now, since this is a debt item, we want to find the lowest one. So we don't want to say, look for the lowest numbers. We want to look for the upper numbers. So let's just say we want greater than 13. So we hit OK, and there we have it. So now if we run this again, we're going to find about 304 stocks, and you'll see here these are all the companies that pass. Now let me go back just a second and let me go ahead and add to the report the items that we screened on. So let me go back up here and look for a return on equity. So I'm going to add that to the report. Total debt to total equity, go ahead and add that to the report. And then just for fun, let's go ahead and just add a market cap so that we know how big these companies are, so we can sort by the biggest ones first. So I'm going to go ahead and add market cap to that from our DBCM database. So let me rerun that again. We're going to see the same list of 304, but now we have, to the report, the actual return on equity and the actual total debt to equity. You can see a lot of these are actually zero, so that's interesting. So that means that these companies are generating this return on equity without any leverage at all. So that could be a potential opportunity here. Companies that have strong returns on equity without manipulating that return on equity simply by levering up the balance sheet. So if I screen by market cap, you'll see that, okay, Google is at the very top of this list, followed by Facebook, PayPal, a couple of others here. So these are your cream of the crop return on equity stocks with low debt. So these are the various types of screens you can run. I just glossed over a lot of them here, but the last thing I just want to quickly mention before we wrap up on the call is we also have this backtest option. So let me go ahead and clear this out again, and let me just show you a quick example of that, and then we can wrap up the call. So let's open up that screen that we had saved from before at the very beginning, this momentum growth, where we have our momentum screens as well as Zacks Rank and Sales Surprise Beat. If I hit backtest here, this is going to go ahead and backtest this particular screen. So if you're just curious to see how a particular screen has worked, how effective has it been in picking stocks, this backtest is a great little tool to help you do that. Now we do have much more powerful backtesting. This is a very simplistic backtester, but I would be remiss not to mention that. So let's just select the time frame here from the very beginning to the very most recent period. This gives you a maximum of 5 years of backtesting capability. You can set the holding period so that this is the rebalancing frequency. Either you tell it to rebalance weekly or bi-weekly or monthly. So let's just set it to every 24 weeks so that it's a little bit less turnover. So if I run this here, it's going to go ahead and run the screen at every single point in the last 5 years and calculate how you would have done. Okay. So this strategy obviously underperformed over this time period with a 24-week holding period. But this is the type of analysis you can do with looking at screens that you run and getting an idea of what the performance of that screen would have been over that time period. So here's the total return over this time period, what the compound rate of return is, and then in here you can see the number of companies passing, as well as the relative performance versus the S&P 500. And then you can right click here to look at what stocks passed each period here. And that's just about it. That wraps up our call. That hits up the major items I wanted to discuss. As always, we hope this adds value to your process. And we don't expect you to know everything off the bat, so please do contact myself or your account manager at Zacks if you ever want to create any of these screens here. We'd be more than happy to help. All right, thanks everyone, and looking forward to the next call. Take care. Bye-bye.